Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today, I just want to go over the resistance that we're bumping our head into on the Bitcoin chart because, of course, the Bitcoin chart right now is really moving the market. The way that Bitcoin responds to primarily the stock market, to be fair, is influencing how most of your alts are behaving. And of course, we have some weird coins like GMT and NEAR, which are just doing their own thing because they've just got their own things going on in development like near, or they've just become like social phenomenon like GMT. But for the most part, most of your alts are just following what Bitcoin's doing in some exaggerated way. And so if you just basically look at the chart, you don't need a PhD or too many tools to understand that, hey, this red line right across the middle here, right? It's at this point, it's at this point, it's at this point, it's at this point. There was this wick that kind of came down there. There was this point, there was this point, there was this point, there was this point, there was this point. This just kind of cut through it, but then there was this point, and once again, we're bumping our head on this midline. And this midline is just so important. It's kind of a zone here that just Bitcoin struggles with very, very, just a lot. It struggles with it a lot. And what I'd like to do is just go ahead and put on some supports to see what we have underneath us in this area right now. You could say that some of these resistances were turned into support. But basically, in this area, we've got this kind of zone here that's just been acting as either resistance or support. There's a lot of confluence for these different levels. And then you have these diagonals. So if you're wondering, like, how are we getting a bounce? Well, we've basically been bouncing on this diagonal. I know people, want to highly emphasize the horizontals, but the horizontals in this case are just as hit and miss as the diagonals. But the diagonals have been holding up pretty well, right? So this diagonal just has been holding up really well. And then there may be some kind of exaggeration where it doesn't hit it perfectly or it came a little bit lower. But in general, we've been using this line primarily. And then this whole zone basically has been just a zone of support. Okay, so I know that a lot of people get confused when you start seeing a lot of lines, but we do have to think of these things because these are channels, these are trends. These are not supply zones in terms of the diagonals. These are trends, right? So the diagonals are something different than the horizontals, but you know, uh, you know, when you use them in combination, you can kind of get a better picture because you could imagine a situation where we're rejected here and we work our way back to this zone, and then maybe we even pop back on our way and we use this one as support again as a diagonal. And if you're just looking at the horizontals, it can be easy to miss that. It can be easy to miss that. On the other hand, you don't want to dismiss such a powerful horizontal as this midline. I'm not even going to draw it because it's so obvious, right? You can just visualize it in your mind if you zoom out, right? If you zoom out, it's like what that expression in the industry, right? Look left, because all the data is back here, right? So what else do we have going on? Well, we also have this kind of fib line here, which this is a fib channel. It's not one of those horizontal fibs. And then we also have this kind of like a micro trend, which I think I'm going to start calling these diagonals trends, not support, because I think that gives a little bit of confusion to some people who think that I really consider it as support, the same way that horizontals might be in terms of like supply and demand zones. I don't really think of it that way. I just see it as trend, right? Like in a channel, a trend. And so since we did have a point here and a point here and a point here, and then this was just kind of a fake out the same way this was kind of a fake out, this was a micro trend, but it was one that was very, very important for the price action that we're currently experiencing. And then it just so happened to line up here, so I just extended it. because it seemed to have some kind of significance, which I just wanted to mark out just in case I could project anything with it. And when I did put it against our micro trend up here, because if you'll recall, when I was telling everyone to, I was actually saying we're going to get rejected, way back here. I was saying this is the area we're going to get rejected. I mean, you can go back and watch my videos. I was calling it back here. We were going to get rejected up here. And it's the only time I made a call that I said like it will happen. We will get rejected. And I didn't even have to wait to the second one because the pattern of these fib channels just has been so strong on Bitcoin. It's like part of the algorithm. And I'm not trying to be, I'm not saying that like I could foresee that or anything. I'm just saying that the bots and the algorithms on this asset class of crypto is so strong that you can kind of take it to the bank in some cases. And that really frustrates a lot of, I think, really good traders who use very solid principles because those things like fractals and these other just kind of like crazy things from the, out in the field that it just comes in and it just like derails everything else. And that's how they liquidate people and that's how they make their money. So it's just market maker games. But that aside, you do see that we had this micro trend here where you see this point and this point and this point and this point and this point. That was kind of a fake out. And this was kind of a fake out before they dumped it, right? So this trend line was also very significant, that fib channel. And it just so happens that they lined up perfectly here. And so I do consider this an active wedge in terms of this price movement. I do consider it an active wedge. And I would expect us to be rejected up in this area, somewhere around this 42 to 43,000. If we do that, yeah, let me see if I can get my resistance on. So the resistance areas that I have here, there's this kind of just like we had that horizontal, support and resistance flip, we have this kind of diagonal support and resistance flip where we're on this side of it, we're pretty bullish. And if we are underneath it, obviously we're kind of going backwards. Right now, we've been testing this zone quite a lot. I did thicken it a bit, and that's only because if I switch between log and linear view, that the zone kind of moves. And so I just wanted to make sure to at least touch the wicks of it. But then also you can see these like turnaround points right here, right? Like this was a huge turnaround point. You could have bought in there, right? This was one of the best places to buy in the market. This was all like just Bitcoin, but if you bought here, then it became like an alt run, and it was just a great time to buy. Same thing here. If you bought in here, it was mostly just Bitcoin for this first leg up, and then the alts just started screaming. So this zone is significant. There does seem to be something that just switches, in terms of how price action works and how alts and a Bitcoin behave. And so I'm just leaving that up there. I don't want to overemphasize it or anything. It's just that it is going to be kind of a heavy resistance, if we do get into that zone, because it's not easy to flip that. It's not easy to flip that. I'm just going to extend it diagonally and see if it plays out again. It played out here. We broke under it. Played out here. We got rejected. Played out here. We got rejected. Played out here. We got rejected. And so it is significant, and I will keep it up. Again, like this is kind of the target that I have here in terms of resistance. Basically 43,100. I don't expect us to get above that. And this is just kind of like a mid area, but you can see we start having turnarounds on that midline. So that's why I keep that midline on there. Sort of like I have the midline here because we do get these kind of like interplay within the middle of the range. And it's kind of a big signal, right? It just, there's a lot of interplay going on. Like something may change. Like there's some interplay, like we might be flipping around. And then you look for your lower highs or your higher lows or whatever. And let's see. So if we do get rejected there, like off of the top of this wedge, I do expect that, we'll just remain under there and kind of stay below this area for a while. But the most significant thing that I'm looking at right now is the rejection right here, which I thought that I had. I think this may actually be our kind of point of control. Let's see if I can pull that up. I don't use this too often, so I tend to forget even where it's stored. But yep, the fixed range, right? Let's say we just pull this, just get the whole range. Yeah, so you see there's this kind of point of control right here. See this red line? I didn't draw that. That just appeared from the price action. We're getting rejected like right off of it, right? And so this just shows you where this kind of area of interest is. And the thing about getting rejected here, like we didn't even make it up to here, but the thing about getting rejected here is that it makes this support down here very attractive, very attractive. And what do I mean by that? Well, if you're just a professional trader, you might want to come back and check these zones, right? You're looking at this whole trading zone, and you want to check back here, if you're getting rejected from the middle. So for me, I've said this a couple times, if we're in this area, I just consider it the middle of the chart. And I would rather get in when we have some type of, bullish confirmation or on support. And so support was right here. And I don't know, some people think that if you just put a whole bunch of lines on the chart, like eventually you'll hit one. But this is pretty clear to me, right? Like we had this trend, so this was, so you can buy in here, you can buy in here, and this is the trend, right? And then we also had this support down here. So if we broke down, you could expect to have support on that horizontal. And that was confluent with this diagonal. And so as soon as we regained the diagonal, you kind of understood that, okay, like this game is back on. We've had these type of breakdowns before. And anytime we got back on top of the diagonal, like it's always been a nice pop up. And so I'm just going to stick to my guns here. I know different people have different ways of trading, but I'm not really trying to put like a million different lines on and then you know, say that one of them will hit. This diagonal this diagonal zone has been incredibly important. This horizontal zone has been incredibly important. And this has always been our last resort. And this is our micro trend, same as it was a micro trend up here. And they just happen to converge. And so this is kind of like a barrier that, once we get past this barrier, we're going to be in a new kind of mini epoch, right? A mini time period, a mini era, right? When I say epoch, it's not epic, it's not EPIC, it's EPOCH, epoch, right? So a different time period. And so, one thing that I did want to show you also is that we do have this this other wedge that's forming. And let me go ahead and get rid of this support and resistance, which is on the 3-day. And of course here you can see it's kind of reflected in price action. Like this is general support and this is general resistance, and we're also getting wedged into this, into this corner here. And then you have this diagonal, which separates the top of the chart from the bottom of the chart. Using these are actually EMAs. And if I put the EMAs on, you can go ahead and see it. You can see these 89s. The 89s on the 3-day are just like working their way to this point, and the 200s down here are working their way to this point, and they're converging. And in fact, this this 200 EMA is getting pulled up faster than I thought. But again, the 200 EMA is just kind of creeping along this orange line that I drew out. And the 50 The 50 is kind of getting underneath the blue line, but the 89 is staying above it. So we're still holding this kind of average. I just made this an average of the 50 and 89. And the reason I did that is because in examining the EMAs on all the time frames for this past dump, I noticed the same type of occurrence. And here you even see the 200 popping up like this. And so again, like I looked at it at the daily, at the 2-day, at the 8-hour, at the 5-day, and what I just determined is that you had a cross that came on the 3-day. So that's the power of the EMAs. You can kind of see how this price action gets wedged between them. And sometimes there's a significance on the 5-day, sometimes there's a significance on the 3-day, sometimes the 2-day, the 1-day, the 12-hour, the 6-hour, the what have you. You look at your EMAs on different time zones and you can see what type of squeezes might be happening. And this is a very big squeeze. This is something not to sneeze at. That is a dangerous thing, and it is happening right here. So can I combine that with anything else? Yeah, I can combine that with the 5-day theory that we had of the Gaussian channels, where we're also being constrained by this 50, right? Right at the midline of the Gaussian channel. And then look right here, the 200, that 3-day 200 is at the bottom of the 5-day Gaussian channel. And I've always been using the 5-day Gaussian channel for this reason. And we did get that wick underneath the Gaussian channel. And I said, anytime we have like a little wick there, it's never been the worst case. It's never been the worst, wick to buy. Like whenever you bought a wick underneath the 5-day Gaussian channel, it's always been a pretty good, short-term trade, at least, if not a hold for the long term. And so we did get a little wick there. And if you had bought on that wick and at this diagonal support that I had drawn out here based upon the 200 on the 3-day, which does seem to have significance, as long as it was using it as support and not breaking down, you didn't have to freak out too much because there was still a gap with the 50. So this squeeze is still playing out. We weren't in danger of just dropping to hell, right? Like this, that's the thing that everyone freaks out about. They think like, oh, we might just suddenly drop to hell, so I'm afraid to buy. No, we were literally at the support, and this 200 has clearly been acting as support. All right, so the 5-day Gaussian channel has been acting as support at the bottom of it, and also the 3-day 200 EMA has been acting as support. So can you say, oh, well, you just draw a million lines, so eventually one of them's going to hit. Like you have so many lines on your chart, eventually they're going to hit. No, there's logic to that. I've been talking about the 5-day Gaussian channel for months, and the 200, and I've been analyzing this collapse. This collapse in 2018, I've been analyzing that for months, ever since we first started falling here. And it's just that we're starting to get all this converging data and how the price action was supported. And so these things are important. I believe, I even have like some macro theory that I've come out that's just completely unique to my own analysis. Whether or not this plays out is yet to be seen. I also have a bullish possibility. This is the bearish possibility. There is a bullish possibility because all of this can be invalidated. None of it is fate. It can be invalidated by certain price action, specifically because of bullishness in the stock market. If the stock market goes bullish, I'm going to show you how this fate can be avoided, right? How we can avoid this kind of mid $25,000 zone, but it's really up to the stock market, and it's really up to the Fed, especially in May, when they're going to announce whether or not they put heavy-handed interest rates or not. But until then, I am using this model. And again, I'm not trying to overwhelm people or trying to like have any sleight of hand where, I just draw a million lines and eventually some of them, all of this data is convergent, right? All of it is convergent, and it all has a very specific logic. And so while I'm very conservative in how I trade, and in fact, I don't trade all of these patterns. I personally find fractals to be extremely risky. I find projections that are further than one step away from the current trade to be too risky. in this type of an asset class, and so I do not trade on these ideas that I'm presenting. The reason why I present these ideas is because A, it's entertaining to try to project the markets. B, it's good practice because it forces you to be accountable for the things that you say. And if it invalidates or validates at certain places, right? And if it holds, then it holds. If it breaks down, it breaks down. But if we just suddenly flew off or we just suddenly like dropped down, I could say, oh, I was totally wrong. But it held, right? It held. And you were at support and you were underneath the 5-day Gaussian channel. And if you bought in there, it would have been a good trade. And we hadn't reached my danger zone yet. And so far, the validity of this structure that I built here has been holding up. Again, like nobody else has this model. Like this is the model that I developed, and then my danger zone starts here, like approximately, we could say the first week of May. But I wouldn't expect anything traumatic to happen until the first week of May, and if we're on the underside of this dotted line. That's my validation, and my invalidation is if we're over it, then potentially we're going to be extending this, and maybe all of this was for naught. But on the other hand, like we could really want that, because if we do end up breaking down, it could be a crypto winter. We don't know how long that crypto winter could last. Personally, I would much rather have a bull run. I would much rather us do this, right? Something like that, rather than us getting rejected, testing 37, kind of like a wick like that, and then kind of like chopping here and spilling our guts down on a squeeze play from these EMAs. Okay, like I would rather have a bull run than this, because this is going to take a lot of time to repair, and this is going to be extremely profitable. So don't get me wrong, I'm not rooting for the downside. I really would prefer to have a bull run, but I'm just going to call it as I see it. And right now, look exactly where we got rejected. Guys, I've had, this lineup for a long time now. So we're getting rejected like right at that dotted line, okay? Look at where this thing bounced right here, right at that dotted line. Look at this wick, right at the dotted line. Look at this wick, right at the dotted line. Look at this wick, right at the dotted line. Look at these two wicks, right at the dotted line. Look at the top of this price action, right at the dotted line. Look at this wick, right at the dotted line. This is significant. This diagonal is significant. And the fact that it converges with our EMAs, because this is trend, and these are EMAs, and then this is a fib, and this is just like a micro support from this area, right? This is a fib from this area, and this is micro support from this area. This actually extends infinitely in both directions, but it's only significant for a limited amount of time. Eventually, you move through fibs, right? And so we're going to break out of this zone pretty soon, but it was good for this price action to this price action. It was good. Now it's going to be long in the tooth, and this kind of death cross is going to take over. And while I changed the colors on some of these things just to make it a little bit more aesthetically pleasing, I think it was just some kind of ugly color. I think this looks a bit nicer. I've kept everything the same, so I am being consistent with you guys. This isn't like sleight of hand, and I'm not just drawing a million lines in order to pray that one of them hits. Like this is using EMAs, Gaussian channels, trend, micro trend, right? It's using fractals, and I haven't even gotten to that yet. It's using a bunch of different strategies in order to develop this concept on multiple different timelines: 5-day, 3-day, daily, and also like 6-hour, I think, at the minimum, right? So all of this is converging together, and it's telling me like this is a critical area. And additionally, other indicators like the volatility, right? Which okay, so let's go ahead and yeah, I think I'll just show you the kind of a fractal that I pulled out here. So this is the fractal. I talked about this maybe 2 months ago. When we were in this area, I suggested, oh, we might be breaking down into this type of thing, right? Because I got out of the market around here, around 59,000. I was warned to get out by my friend, like around 62,000, but I waited until 59,000. Just was my confirmation of the downtrend, and kind of wish I got out at 62,000, but hey, and then we started to make this type of area, and I just thought, well, this could have been a blow off top. Like if we took the top of this one and put it on top of here, I just hypothesized it could have been a blow off top if you just added this to the top of this one. And what if this was just a dead cat bounce, even though it got higher than the previous one? What if this was just a little less controlled than this one? And so, the market makers just couldn't control the enthusiasm on this one as well as they did this one. And so what if we just considered this was a blow off top and this was a dead cat bounce, and that we were kind of having a fractal from 2018, which was when I started to develop this kind of, theory, right? You can see the blow off top hypothetical, and then the geometric momentum kind of interplay, just hypothesizing if it played out the same way had this been a blow off top, and then taking the directionality of the price movement and also the origin line, right, which was these different types of origin lines and those type of things, and then just looking at the range that tends to play out and how that range might come here. I think I used fibs in order to analyze that. And so all of that came together in order to just suggest this type of projection, which I made independent of pulling this fractal. I pulled this fractal later on after thinking up of this type of scenario. And the fractal I took from this area because this is kind of a wedge that's being formed here. And same thing, this is kind of like a wedge that's being formed here. It's just that this blow off top never happened, which would be over here. And it's almost like this area was moved from here to here. And that sort of changed the momentum direction. And so thus this has a higher upward momentum, which is actually good for the long term. And let's see. So if we put that fractal from 2018 onto this price action, which again, it can't be perfect because this price action was a little bit more horizontal, whereas this price action is a little bit more upward. And so there may be some things that are considerably off. But in general, we can see that we got a very, very similar kind of chop to it, where we came off of this, this bounce, and then we made multiple levels. We found some type of diagonal support, which, by the way, in 2018 was also the 200 EMA on the 3-day chart. We bounce off of it, and then we made a blow up. We made a dead cat bounce, which was to the mid to high 50s, which really long traders like really experienced traders like Eric Crown Crypto, like he said, like we should be getting into like the mid 50,000s, but we never did. And I think the market was suppressed by the Russian war. That threat of nuclear war, right? Kind of suppressed the markets a little bit. And so we never got that. Instead, we got an inversion of this movement. And you can see the inversion. Like this is pretty much this, but upside down. And I noticed that quite often that when fractals fail, like when otherwise perfect fractals fail, they tend to have inverted sections. And it's almost like the bots, got a plus and a minus flipped around. But in fact, it may just be that the magnitudes stayed the same on the calculations, but that they just determined that one way was bullish and one way was bearish, and that for whatever reasons, sentiment was bearish, probably because of the possibility of nuclear war coming up during this time in February. And so the bots just probably said, okay, well, it's bearish. Let's play out the same magnitude, but to the downside onto support. And so this basically played out upside down. The markets did stabilize. We repumped to that midline, that very significant midline. And then the rest of the fractal started to play out. Something in 2018 around March. I'm sorry, I can't tell the date on this one, but something in 2018 scared the market at this top point, and it just got rejected. Just got rejected. It may have even been a fib line. I'll have to go back and see if it was another fib line. But it also got rejected in the same way that I was saying that like we were absolutely going to get rejected here. And look what happened in 2018. It just got smacked down. And then price action gravitated towards the middle, which is exactly what we're doing right now. The price action gravitated towards the middle of the wedge. And look at this pump, right? Very similar to this kind of pump. And look at this peak, very similar to this type of peak. And of course, the price action was different in 2018 than in 2022 now. So I don't really know what's going to happen next. And also the market conditions were very different. But I do think that we are in that make or break zone. And if we just start chopping sideways, this fractal is going to continue to play out. And we are going to get wedged into this corner. And then all of those EMAs and the Gaussian channel stuff and all of the things that I've been talking about for months and months on this channel will play out. And let me show you what that looks like in the extreme. Boom. Okay. And it's just funny. This is coincidence. This fractal was, I found this fractal after developing these things, right? I just was watching the price action from 2018 and analyzing the EMAs and the Gaussian channels. I did not know that this price action would fit this thing. So I didn't make this to fit that fractal. The fractal just coincidentally fits my model. And then what would this suggest if the magnitude is similar? It breaks all the way down to $20,000 and as low as $14,000. What have I been saying on like multiple videos that if we do have a break to the downside and if we have, some type of global recession or something that, we could see as low as $10,000 and that people have to consider it realistically. Well, this fractal would say that based upon the EMAs, based upon the Gaussian channel, based upon historical trends and price action, that this is possible. That this is possible. Now, could it be exaggerated? Like, for example, do you see this inversion right here? Never underestimate the ability for these type of corrections to correct in the other direction when you have an inversion on the charts. So just like this one was, just like this one was down in reality, but the fractal said that it would go up. If the fractal said this goes down, it is actually possible for us to get above this price action and to end up making like a bull run to like 80K or something, and then, doing something until we get maybe below this midline, that significant midline. And then maybe we do something like that again or something. Like you never know how this stuff can work out. So again, which I told you a while ago in this video, I don't trade on fractals. I just use it, for entertainment, and I use it to practice various concepts and skills because I like to see how it works out. You can, you can trade against like the current chart, or you can trade against like these fractals, and it's kind of like back testing, right? It's kind of like back testing, but it's forward testing and back testing at the same time when you're using these type of fractals. And so it just gives us an additional idea of what may be possible because we've seen this actually play out. We've seen this actually play out under similar conditions of the EMAs, where you had the 50s up here and the 200s down here, and they were crossing over right at this point, and where you had that point of separation from the 200s, where they just went their different ways, and where the 50 and the 89 converged and started to splay out in this kind of a way, then the chart took a huge dump. And then on the 5-day, same thing with the Gaussian channels. You got to the mid, you tested the mid line as much as you could, but then you started to get trapped and squeezed under these 50s and the 89s, and you just eventually came to a point where you dumped. And what's happening here? Same thing, right? Same thing. You're getting squeezed by the 50s and the 89. On the 3-day, the 50 and the 89, and then the 200s, you're getting squeezed down. And then on the 5-day, you tested the midline of the Gaussian channel, and then if you get repressed in this area, this is kind of the point where you should kind of start thinking about what you want to be doing with your portfolio. I'm not trying to scare anyone. I'm just saying, like, this is possible. Okay, it's just possible. And I'm not drawing all this stuff because I think that, like, randomly the price action will hit something and then I can claim that I called it or anything like that. I don't care. Like, I literally don't care what anybody watching this thinks about, this stuff. I'm only doing it to protect my own my own capital, right? Capital preservation. And so if this stuff ends up working out, I'll be really happy that I thought about these things and that I drew out all these supports, that I drew out all these resistances, right? And that I had some concept of how price might move here, and then also how price might have this type of death cross and where this thing converges. And then I'll also be happy that I had some awareness of, this kind of bearish pattern. And I'm going to be, pretty happy that I understand, those principles of the Gaussian channel and then also of the EMAs and all of those things. Because this type of traumatic dip is much worse than, just missing a couple $1,000s in a trade because I'm a little bit bearish. I honestly don't care about this price movement in the middle here. I care about grabbing this, or I care if we break out of all of this mess, trading whatever may come in the upside. And let me go ahead and show you what could happen on the upside because, again, I'm not bearish, I'm not bullish, I'm just trying to preserve capital. And if you want to see, let's see, what was my, yep. So this was my hypothesis for a possible momentum inversion. If we do get pushed to the upside, what would that look like? Like, let's just say that all our, all our volatility that's just basically on the floor here, right? Kind of ready to scream to the upside. Not just on the 5-day, but also building up on the 2-week. And on the weekly, it's almost to the floor. I mean, look at this, like this stuff can scream. And I mean, let's look at some other time frames. What's the daily looking like right now? Just drifting. 3-day, 12-hour has something going on. A 16-hour and 12-hour and daily look like they want something to happen. But anyway, I'm not sure what it's going to be. Is it going to be down? Is it going to be up? Again, that type of volatility, you don't know. It's called volatility for a reason, right? It could go up or down. It's a volatile. But if we do have price action that is kind of moving in through these channels, and that there is this momentum inversion, then let me show you where I thought that we could, potentially have this type of kind of thunderbolt shape. And this is the area that I suggested that we would that we would want to buy into if this does end up playing out. Now, maybe this isn't perfectly set, but again, I drew it when we were back here, right? I drew it like I fine-tuned it when we were like here, right? So I made this like a while ago when we had this Z pattern. I started to develop this possible bull case just in case the world turned bullish. And so the fact that it's actually following this well so far in these channels is pretty cool. And look at this, like we literally came down here and then we pumped up to this midline just like I suggested was possible. And then we came down here to this pink line just like I suggested was possible. And I suggested that was going to be the buy-in point. If the market is bullish, that's going to be the buy-in point. And then you could potentially see like some type of screaming up to the upside and you won't even know what happened. You won't even know what happened. You're going to get left in the dust. You're going to see a major pullback to around 50. After you get into like the 60s, you're going to see a pullback to the 50s, and then who knows? You could go as high as like 75 or 80,000. And I'm going to keep this bullish model just in case it plays out. Of course, it should be fine-tuned because we now have price action here. Previously, we didn't have price action here. We only had price action down here and over here. And so now we can start seeing if any of this is actually playing out or not. But the fact that this happened is incredible. And I think if we put on the candles, you can see the wick came, that's too good. The wick came dead center of this buy box and on that pink support line that I hypothesized. This was not drawn on its own. Let me show you. This is drawn from this one up here. So this is a momentum inversion, right? And actually, it looks like this one is a little bit crooked. If I straightened it out and brought it down here, because again, this was just like some, BS, right? I was just making stuff up in my mind. Then you can see like we had this point here, we had this point here, and we had this point here. And I know that this is supposed to be aligned in a certain way, but just pretty incredible. It's pretty incredible that it even came that close, right? That it even came that close is just incredible. And yeah, I can be proud of that. That's very interesting. And if we do scream up, that's going to be shocking because I've been so bullish. I've been so bearish or focused on the bearish possibilities. But sometimes this market does just flip in ways that you wouldn't expect. For example, like if we take the Dow Jones here, we've seen a major pump from down in this area. Like I thought we were going to get rejected here pretty hard, and then we broke below support. And I thought we were just going to keep breaking down, and that would be the cause of Bitcoin's dump. Like we just slowly work our way down, and Bitcoin would lose support, and then we're going to have a macro correction. And this could still happen like this, right? Something like that. Who knows? I mean, it could. I don't know which way it would play out, but it could end up something like this. And then if the Dow Jones gets to these levels, of course, Bitcoin is just going to be in a black hole. But the fact that the Dow Jones ended up recovering support and is now on this, I mean, look at this, right on the crossover, of this resistance and this resistance. We need to get on top of this. If we can get on top of this, then we can potentially have a, potentially have a bull run on Bitcoin. Like we just need the stock market to help us out. If we can turn this resistance into support, just kind of get out of here, break out, and then I think Bitcoin will just follow right along with it. And then maybe we could see that, 50K, 60K, 80K even. And if we break down under this support, All right, so this range between like 34,500 and 35,000 on the Dow Jones is very significant if we break down under 34,500, and definitely if we break down under 34,000. Probably we're going to be testing new lows or at least double bottom or something, and it could get very ugly. It could get very ugly for Bitcoin. Right? Yeah, I mean, like we have a lot of work to do on the S&P 500. Yeah, so let's see if this breakdown happens or if we break up and just like accelerate. But okay, guys, I'm going to stop there. That was a lot of information, but I do think that conceptually these things are helpful. Again, I know a lot of people get frustrated by this kind of thinking, and if that's the case, then you don't have to like really follow along with this stuff if this stuff doesn't interest you. But for me, I like to zoom out and I like to look left. I like to see what came before us, and I like to use it to make projections, for what might happen next. That's what interests me, right? That's what interests me, and that's what makes me, believe in this asset because I can see the upside even as I talk about downsides. I can see the upside. Like I have in my vision probably numbers that are far more bullish than most of the people just trading the ranges. And it just keeps me highly motivated even as I plot out these potential buy areas on the downside. These are my ranges, right? I don't really care about missing $1,000 or $2,000 on a very short time scale. But that's not to say that you can't get massive gains for it. This coin was pointed out to me by a guy named Tsunami Eddie. I was showing you this the other day, and whenever you see like these green vertical lines on a chart, it means that I had charted it out a long time ago, and I just thought that the indicators were showing like this was a great place to buy on the chart. And almost every time I don't buy it when I've marked out one of these, like I seriously regret it later. And if you can't tell why yet, let's just plot that point to the current price action. 360%. This is the daily chart. This thing has just been going crazy. Ever since Bitcoin had that dip, it's up 230%. I don't even know why I didn't buy it here. Like I was telling people about it, like right here. I was talking about it with people. And I remember Crypto Reda was mentioning, as it was pumping up here. And then I saw this pullback. I was like, oh, that's a really bullish pullback. I had this signal. Maybe I should buy in. And just when Bitcoin dumped, of course, I'm an emotional person. So, we all are in some ways. And I just was risk averse. But sometimes life presents you with really great opportunities and you have kind of a gut instinct for it. And, if you don't take that shot, it's like, a friend of ours called, named Lewis, he said, like, scared money don't make money, right? So, quoting, that kind of quote. And so, yeah, if you sometimes fear can prevent you from taking a good trade because that was a nice series of higher lows, kind of a huge bullish indication, a turnaround on this. And look at these signals. And just to prove to you that like, this isn't BS, like I'm not just marking out a low, like, oh, guys, I would have bought here. No, I literally marked this out like when we were here. And you can see, my indicator strategy. I'm willing to share that with you, which a lot of people don't because they're kind of pretentious in this, space. But so, for example, like on the daily RSI, we had crossed over. Let me show you. Like we had crossed over to the upside on the daily RSI. Like we were under the EMA, but then we crossed above it. I just thought, okay, anytime it's done that, it's had like little pumps. I mean, nothing significant. Like this coin has been very ugly for a while. But I said, okay, well, maybe we could get like some type of pump, right? Look, it was really pathetic too. But it's not just that, right? It has to come with a confluence because that just means that price actions can start, building up. We were still in the bearish control zone. See, under this pink line, that's the bearish control zone. So we were still bearish. That's why these pumps were like ugly. It didn't work out because we were in the bearish control zone. But you're thinking, okay, well, we're making higher lows, and we have higher highs, so maybe the next one could get us out of this bearish control zone. And if so, then it could have a nice run, just being in kind of, freed from this bear zone. And then I looked at the Stokes and I said, oh, look, like this thing has had major cycles and it's pretty much double bottomed and it broke to the upside. You see that? The blue got on top of the red, broke to the upside. So minimum a little pump, but potentially we could do the whole wave. And then you look at this oscillator, right? The bearish, um, indication had already kind of played out, and you started to have a positive spin on the oscillator here. And this is just a Crown's oscillator. It's basically the exact same thing as this free one, but just with a couple other indicators. And then I just noticed that, okay, well, this is kind of like bottoming out in this red zone here. It has the same kind of like an upturn. Just kind of waiting for the pink one. Like this was kind of like putting me off, and the fact that we were still red, I didn't know if we could dump more. I do value Crown's kind of logic, and so those were two worrying points. But overall, it looked pretty good to me. It looked pretty good. And then look at this crossover on the MACD, right? Crossing over the upside. And this is like a major waveform, right, for the history of this thing. So that could be a major wave. So I just thought, okay, well, that's a good point. Yeah, it could go down again. Like this could just be one. This could just be like one blue, one green moment on the chart, and then it goes back down. That's possible. Like sometimes you get little bumps on these things, and then it goes back down. But in combination with the other things, that was kind of a positive indication. And volatility, was, just kind of mid-range, so nothing too special or, crazy about that. But we were moving to the upside. We were expanding to the upside and got above this EMA. And so for the PMAR, right, which is this indicator, for the PMAR, I saw like an expansion to the upside. I was like, okay, well, it wants to go up. It bottomed out at least. It bottomed out, and you had a nice kind of bottoming here. And then for the regular volatility, like the directionless volatility, we just saw, well, it was going to continue. I didn't like that. I didn't like that because I thought continuation could mean that it was just going to continue to the downside, most likely. And this is just RSI, but there was the possibility for this kind of like a bullish divergence to be forming. Just to be honest, I didn't see that. I just went with the regular breakout here from the EMA. And you can see that momentum, that kind of volatility momentum did continue to the downside. So we did kind of get that price action down. And so I wasn't wrong about that. But what I was wrong is that it was just a delayed function. Every other indicator was just screaming that it was just. So I set this marker. I thought, okay, maybe I'll buy in, on a higher low or something, which should have been right here. After I saw this pump, I should have bought in on this retrace because everything was screaming to me that like this was gonna have a macro turnaround. And so again, like you couldn't have seen that just from price action right here. Price action and trend and everything else would have just told you this is a falling knife, stay the F away from it. But selective use of indicators and confluent indicators told me buy in now. This was your best opportunity to buy in on this asset that you've had, maybe ever, right, on this asset. And so take a chance. And I didn't take that chance because I'm a human being and I make mistakes, and I didn't respect my own principles or my own, trading rules, and so I missed that opportunity. Life presented me two more opportunities, and I didn't take it. And then pow, pow, right? So that's how it works, right? That's how it works. And let's see what it actually looked. Whoops. Let's see what it looked like right here, just for comparison. Yeah, so once again, we kind of like we're bottoming out on the RSI, threatening to come back up. We were already out of the bearish control zone. And so if we did break above, that would have been a good signal. Kind of bottoming out on the, all of these look like this, they want this line moved over. So I wouldn't have gotten in here, but I would have gotten in here. Yeah, there's the crossover. There's the bottom turning to the upside. Let's see, this momentum, this kind of oscillator turned to the upside, so move this over a little bit more. Again, same thing. It's pretty much the same indicator, but this money flow was, sorry, this flow was actually very bullish here. Got out of that bear zone. Yeah, the momentum had turned to the upside. Actually, let me take a look at that again. Yeah, these were all converging. You could predict that the EMAs were going to converge on the momentum. And then, yeah, the the volatility was expanding to the upside again and crossed over that EMA. This is all converging so perfectly. And then your directionless momentum just, bottomed out and started to expand. And then again, this is just the RSI. So yeah, I mean, this would have been the perfect signal. Now, I couldn't say that I couldn't have said I bought the bottom here, but I would have gotten the signal to buy in right here. And let's go ahead and put that on the 4-hour. And so let's see how much you could have made on this trade. You could have made 200%. It's, probably a little bit over 200%. What was the maximum of the wick? Yeah, 225% if you got out at the very top. And this thing may even still be going, I don't know. But it could be risky. You see this major retrace, right? Just understand this thing already pumped. You don't chase pumps. You try to get in on a low, right? And I'm sharing these strategies with you because I want you to see like how I actually trade. I don't want you to think that I just put a bunch of lines on the chart. And here I didn't put any lines. I didn't put horizontal lines. I didn't put diagonal lines. I didn't even use my EMAs. I just showed you how I could trade using my indicators. And so when I have all these indicators up, it's not for BS. I just outlined two perfect places to buy on a chart that screamed up almost 400%. And you could have gotten 200% or you could have gotten 400% if you used my style of trading. And I'm showing you multiple different ways to trade here. And so if you don't believe, in what I'm doing, if you don't like my style, there are plenty of other channels for you to watch. But please don't diminish what I'm doing. Please understand that there is some pride that I have in the way that I do these things and the way that I think outside of the box. And I can do it without any lines. These are vertical lines. I don't have to do it with any horizontal lines or any diagonal lines. I can do it just with my indicators and just marking out verticals, just to signal the location I would have bought in had I taken the trade, right? Had I followed my own principles on this one. But hey, we're all emotional and we have to accept that and understand our limitations also. Sometimes you miss the trade. Just look for the next one, that's all. Maybe this is going to retrace. and maybe it's going to provide another chance, and maybe I'll get a signal like right here on that next chance, you know? Or maybe it's just going to go to Valhalla, right? So who knows? But you know, there's always another trade. And the other thing, you know, where you would want to use your horizontals from, and this was taught to me from my mentor, like CryptoRetta. I'm not sure who he got it from, maybe Mitch Ray or something like that. But you know, if you see like these type of, you know, areas, kind of like confluent areas on the weekly, then maybe you want to take your profit in those areas. And it could be some wick or something, I don't know. But it's also like the 5-day. So this one was confluent with the 5-day. It's kind of like 5-day wicks up here. And who knows, maybe this one's going to go up to like 60 cents. I don't know. But there's this kind of wick right here. You see this one on the 5-day? So maybe it's just kind of bumping into that wick right there. I like the 5-day. I like the weekly. I like the 5-day. Monthly, this is too new of a chart. But the monthly, I have to play around with that some more. I always forget about the monthly. And then the daily, I tend to neglect, but I've seen people use it in extremely powerful ways, and I should really incorporate that. And so for taking profits, you'll want to have these type of zones because what would this have told you? It would have told you to take your profit here. And to be honest, it would have told you to take your profit here. All right. Obviously, you want to wait until you stop pumping, but it would have told you to take at least some profit, like on this line and this line, this line, and then maybe you have another take profit here. And if you started to retrace, then, you know, get out. But I mean, you can leave a moon bag or whatever, but better to take your profit, see where you come down to, and then, you know, whatever strategy you have, like whatever strategy you use, like, you know, if you believe in this asset, then you can continue to go. Okay, guys, I just wanted to show you how I trade and, you know, try to bring something back home and show you the different styles that I use. Again, I primarily use EMAs. I didn't use it for this one, but I also use indicators, and I also use all those other methods that I've shown you. And I enjoy it. I like it. Let's see. This thing is actually having a squeeze play on the 3-day, 5-day. Yeah, this is a 3-day squeeze play working. Look how beautiful that 3-day squeeze play was. My goodness. So if you were trading just the EMAs, the way that I prefer to trade, again, that was taught to me by my mentor, CryptoRetta. You know, you could see the squeeze play. And if you saw that price action moving in there, then as soon as you got that positive slope on the 20, like you could have just gotten in there. So probably my mentor would have gotten in on this candle also. The only thing is that you know, he prefers like a daily, and so daily, yep, that would have been a good signal. And then on the retrace, I think he probably would have gotten in here if he wanted to trade this asset, and if he had seen the squeeze play. But I don't know. I don't know because the squeeze was over. It was to the downside now, and so then it just popped up. So using all of these things together, right? Because this is like these EMAs are another confluent factor that could have been put together with all those other things. Gonna go for real now. All right. All right. You guys have a good day. Stay safe and happy trading.